What's going on, ladies and gentlemen? Welcome back to the channel. I hope you guys are well. So what we're going to do today is we're going to review our Elliott wave count for the S&P and the Qs. We're going to review alternate versions of our bullish count and our bearish count. Each one of these will tell us if we're going to keep on heading lower after this consolidation for today's price action, or we're going to just consolidate and break to new highs. So before we dive into the analysis, guys, you already know what to do. Give this video a thumbs up and don't forget to subscribe to the channel. As an alternative, guys, join Trending Waves, the Discord group. Okay, the link to the room is pinned down in the comment section. All right, now look, we're still looking for this wave 4. All right, we're still looking for the completion of this wave 4. If it's already completed here on February the 24th, or we're still on our way down. Okay, that has yet to be determined. Or at the very least, if in fact this is a whole, a big, actually, let me just do this instead of doing that. If this whole structure is a wave 1 and we're looking into a wave 2. All right, so that's still at play as well. I know I've shown you guys this count before. If this is the scenario where this is the wave 1 and this is going to be A, B, actually, let's do this real quick. If this is going to be the A, the B, and the C, wherever this lands, C of 2, all right, this scenario is likely to be the most painful one, but in the long run, the most bullish case. All right, I don't think we're there yet. I think that what we're looking for is right now a potential completed wave 4, which is in our main count. All right, so 1 2 1 2 3 4 5 to the third to the fourth. This whole structure is still within a cycle degree wave 5 of minor degree wave 5, which has implications to head up towards north of 587 to 535. I know you may be saying, bro, you're crazy, but it's not out of the question because those are projections of fib extensions from the wave 2, from the wave 1 to the 4 and to the 3, and that's what we get these targets. For now, we're going to work one day at a time. So this wave 4 on this count held support at the 38.2% retracement or 412.88. So that's our low on February the 24th. That's a key level that we have to sustain and we have to defend as bulls. All right, now I'm going to take you guys down to this zone and we're going to review wave structures and the wave count from our January, or from the top in the wave 3. Okay, so taking it down from the daily to the 1 hour time frame, let's take a quick look at what price action is letting us know. Okay, so out of this wave 3, okay, we have wave A, B, and C to the W, X, A, B, C to the Y. Now, the wave 4, as I mentioned, has completed here on February the 24th. Now, keep in mind that when we topped here on January, okay, we created a downtrend resistance line. Okay, that was confirmed here on the 12th, that was confirmed here on the 9th, and again rejected here on the 3rd of March. Okay, now it is important for us to understand that this trend line, the one I'm drawing here, is of key significance. All right, we must be able to break above this trend line and retest it somehow to then be able to repel or propel above it and beyond. I just sounded like Buzz Lightyear. Sorry about that. For us to consider that 450 in the SPY is even in the books. All right, for this wave structure. So out of the 1 hour time frame, actually, before we dive down to the lower time frames to review the structure that happened, intraday today, I want you guys to note this, right? The reason why I'm favoring this count is because we have 3 levels of confluence from 3 different wave structures, different degrees in the wave count. But not only that, but we also have confluence. Okay, if I draw a horizontal line within this zone, we see that we have confluence of support in this pivot here. Okay, so this pivot here was key because that gave us the move to a new all-time high here in September. Okay, so that's critical and that's key. So I'm glad and I like the fact that we bounced impulsively out. Now the question is this price action corrective? Is it hovering below the trend line and rejected? Because if you can see here, there is a pattern, right? There's a pattern. What is that pattern? The pattern is that every time we test this trend line, we sell off. Okay, we tested it, we sell off. So now we tested it for the 3rd time. Are we going to sell off? Is 3rd time a charm where we just find support and we head out, or is this going to fail? Okay, so for us to find out, let's go down to the 30-minute time frame. Actually, let's go down towards the 15-minute time frame. In the 15-minute time frame, guys, So out of a February 24th low, we went up in one, and now we're looking for one of two things, right? We're looking to see if this is the A, B, and C for the wave two, which is likely at the moment because, I was intraday today, right? I was looking at this as the potential wave to complete it, but we see a lot of overlap. So the way we're viewing this, guys, is that in fact we are going to see another leg lower. So what we're doing here is that we're forming a triangle out of our wave one, two, three for the wave four. All right, so this is wave one, wave two, wave three, A, B, C, D, and E on the wave four, and then we get our next leg lower coming into next week. So that's what I'm looking for. If by any chance we invalidate this, how do we invalidate it? When we make a high, if we make a high above 433.29, meaning the wave A. If price action coming into next week breaks above 439, sorry, 433.18 or 20 or 30ish, okay, then it is likely that this wave count is over and we may be into a different pattern. But I don't think that wave two has completed in the mining degree. I think we still have more ways to go. So keep your eyes out for that, guys, and keep your eyes peeled because it is likely that we may see a shorter leg in the wave C, okay, down towards the 25, the 38, and the 50%, 427 and 424, okay. And as I mentioned to you guys yesterday, this zone, if we go back to the 1 hour time frame, this zone is pretty important because we found support multiple times. All right, we found support here in the low. We found support here on January the 27th. We found support here on March the 1st. We found support here on October. We bounced to new all-time high. So this zone and this pivot is pretty important, guys. It's notable. Okay, so we may lose it briefly to potentially just maybe fake the bears, and then we go all-time highs. Who knows? We'll wait for next week. All right. So taking you guys over to our sorry about that, our other count. Let's hide this and let's take a look at our alt count too, which suggests that we are still in the wave four pullback. Okay, this is an expanding triangle. I'm gonna take you up to the 1 hour time frame real quick. So this count, guys, is letting us know that on January, when we topped, we have 1, 2, 3, 4, and 5, truncated fifth to the A, B, C to the B, 1, 2, 3, 4, and 5 in an expanding triangle, which is valid, right? It's pretty valid in the wave 5 of C of, in this case, of 4. Okay, guys. So this count is still valid. It's still very much so valid, just as long as we remain south of invalidation, which is the wave 2 at 448.03. Okay, guys. Just as long as we remain south of that, then we're good to go. We find that resistance here. You saw that it rejected it. We hover below it. So we're going to see coming into next week. All right, so let's go to the Qs real quick. Let's review our bullish count and the Qs. Same deal, guys, same deal. So in the Qs, our preferred count or our main count is suggesting that the wave 3 completed again here in December, January, W, X, Y. We still have the trend line resistance that originated here in January. It was confirmed here on the February the 10th, and then confirmed here on February the 25th. Now, I want you guys to make note of something, okay, down to the 15-minute, and that this was pretty key, right? You guys can see that from when we made this low and we pivoted away, excuse me, we made the A, the B came into a resistance of the 1272, which is coincidentally in confluence with the trendline resistance. Okay, so this was a very, very important level for the bulls to break, but we failed to do so, and thus letting us know that we see potential downside. All right, so this is 1, 2, 3, 4, and then one more leg lower coming into next week. As an alternative, guys, our alternate count, just like in the SPY, is letting us know that 1, 2, 3, 4, slowly going to fade down into the wave 5 of C04. Okay, I know that a lot of us are getting a bit frustrated at this price structure or at this price action. I mean, it has been a pain in the ass, yes, but little by little we keep on mapping out our wave structures and our wave counts, and we start finding possibilities that perhaps which direction. They will let us know which direction the markets are going to head towards. Okay, so that is it for me tonight. Pretty short video. I want you guys to enjoy your weekend. Come fresh and ready on Monday, because next week is going to be wild. All right, guys, so thank you so much for tuning in. Have a blessed weekend. I'll see you guys on Monday. Take care. Bye.